What is up? Welcome to Mile High Market Mastery Live. Today we're talking about the three things that homeowners are getting hit with from all sides, why affordability is such a piece of our world, and why people are really struggling with all things affordability in our market. And so, first off, want to wish you all a happy Thanksgiving. If you are out there and you are, you know, cooking for tomorrow, or you're going to go and, hang out with the friends or whatever you're doing tomorrow, I just hope that it is a safe and exciting um, Thanksgiving for you. I also hope that you are able to, enjoy some of this banter that you do have while you are there. And I also want you to come informed with all of the information that I am here to talk about, because affordability is a thing. It's on the minds of everybody. And the truth is, Colorado homeowners are getting squeezed from three sides. And, yes, groceries are expensive and all of that. But just within your mortgage, we've obviously had the interest rates piece, which applies to most, but not all. We have the taxes and we have the insurance. And I'm going to give you, by the end of this live, a couple ways to mitigate some of that and maybe protect yourself a little bit from some of those increases. Although we all know we don't control much of that, we're going to try and dive into that. So if you're planning on, moving some things around financially, refinancing, maybe making a move, buying, selling and buying, or just buying because you're sick of renting, please reach out. DM me on the platform you're watching on. We are multiply streaming live on multiple platforms. So whatever platform you're there, you can heart it, you can like it. But just reach out if you're thinking about making a move as it pertains to real estate, because I'm going to dive into this. I'm providing you value. So subscribe to my channels or wherever you're watching and we can dive in. But here's the deal. Here's the truth of it, right? Property taxes are something that, are different. If you're watching from a different state, you may think we're crazy thinking that our, 0.75% property tax rate is crazy. If you're watching from a new build community within Colorado, Northern Colorado, and a metro district is involved, you're probably thinking, well, our taxes aren't that cheap. But taxes are a piece of it. And, first and foremost, pay attention when you're voting in Colorado. Anything to do with Tabor, the tax payers' Bill of Rights, that is getting taken away and dwindled away for different things. They put it up, they take it for schools and parks and, all of these things. But little by little, we're only giving our rights as a taxpayer away when we're doing that. So when you're voting, make sure that you know exactly what's going on. And if Tabor is being affected or mentioned, you might want to pay a little more attention to it than you may or may not do. But, post-COVID appreciation was absolutely massive here in Colorado in both markets. And this is something that, we had to eventually pay for, right? We had mass appreciation. And a couple years ago, the tax assessments started coming. And, this tax assessment started getting caught up to and all of that. So when that was happening, we could contest, right? And people are like, well, I don't know. And there's a difference between assessed value and there's a difference between market value. And assessed value takes in no consideration of the market. So no matter what, that is the value that they think your home could sell for with the property and all of that. So when you get these tax notifications in the mail, please read them, please pay attention to them, and please absolutely look at them and say, okay, what can I do? That's your cue. Reach out to me. I can run some numbers for you. I have actually some mathematical equations that I've run that I can help you contest those tax assessments to keep that low, right? And yes, it may not make a big difference that your home appreciated $50,000 and you think it went up $100,000 and you're like, well, there's nothing to contest. The assessed value and the market value are there. And if you're not contesting them on a regular basis, then you're going to slowly get behind the eight ball and you're going to look up and you're going to be paying a lot more taxes than maybe you're supposed to. So we want to keep it clean. We want to keep it real, but that's something definitely to talk about. So the Gallagher repeal, we voted on that. That happened. When that happened, it killed the brake pedal. There was no more stopping. It's all gas, no brakes, right? So we had the mass appreciation. Then we started messing with the tax bills and things like that. And that was an absolutely serious time. Then comes the new construction and the push for new construction. And all of a sudden, we're talking about metro districts and special taxing areas, right? So that's the key. Taxes, I'm going to tell you right now, you just have to pay attention to what's going on with your current tax assessment, because we don't have a whole lot of control on that. So that's there. So understand where you're going, neighborhoods going long term. What's the trajectory? What's the infrastructure that's going to be needed? Is there a metro district that's expiring after the 20 years, like they say? What does that look like? Because those are all things to be aware of and pay attention to. Because yes, in your mortgage payment, in your payment you pay to your lender every single year, a huge part of that, or a larger part of that, is going to taxes than it was maybe 5 to 10 years ago when you purchased the home as a result of some of the appreciation. So make sure that this is, paid attention to. And, put it in the comments. Has anyone gotten hit with the reassessment, with the sticker shock of the taxes really going up? A lot of times we loop this into taxes and insurance. So if you have, hit the like button, put in the comments me, and we can dive into that. But taxes are certainly something that we have less control over, right? Uncle Sam's going to get their money, but we can make smarter decisions on our purchases and things like that as we go. I've sold homes in areas where one area, same zip code, same city, whatever. One area, the property taxes for this side of the street is $4,000. Across the street is $8,000. That's where you need to be careful and understand what you're getting, right? Maybe you're getting more in those areas, but that's definitely that. The next is insurance. Insurance is an absolute killer when it comes to this. We've had some people's policies go up 75%. These premiums are absolutely getting hit. Here's the deal. It's because of hail claims and wind claims. I sat down with a lifelong insurance guy the other day. He's actually getting out of the business because of the stress and all the things. But he was talking about, I asked him, I said, what is the percentage of claims? 90% of the insurance claims here in Colorado are wind and hail related to the roof. And so that's an absolutely massive piece. If, you live on any sort of vertical with pine trees, we got the fire mitigation risk. And, I asked him that same question yesterday. I said, hey, is there actually a time where, a house or a piece of property is absolutely not, insurable? It's like, somebody will write it, it'll cost, right? So that's something we need to be fully aware of, especially when you're in the foothills and the mountains, is this fire risk and this insurance piece that's really coming down, and the hammer is laying down pretty hard on those situations, right? And carriers are just not writing certain policies in certain areas, and so that's also something to pay attention to, especially if you're on the investment side. Short-term rentals are often pretty tough to insure. Mountain properties, like I said, and all the things. So there is a couple things that are, coming up that I'll talk about at the end about insurance that could be helpful. But if you've had a roof claim in the last, 5 years on your insurance, comment roof below, because that's something that's absolutely, coming up, and it's something that we need to pay attention to. And because all of the people have had roof claims recently, they assess that on a zip code basis. So the zip code's going, if your neighbor's getting a roof and the other neighbor's getting a roof and another neighbor's getting a roof, your insurance is going up. You got to do it. But there's also a ton of scrutiny on, you making claims. So that's something to really focus in on and understand, right? I actually almost got canceled because of a paperwork error, because I had two claims, what they thought was on the same property within a year. Turns out it was two claims on two different properties, and they just messed up the paperwork. But they're watching this. Somebody who has 12 or 13 policies with a company, they were going to drop my personal residence because they just filed it all under my personal residence as two claims, even though it's not. So that's something certainly that we need to focus on when it comes to insurance. Okay. And then mortgage rates, right? This is the reason that no one's out buying, that nothing's happening. Well, the truth is the two previous ones are absolutely massively affecting our payments as well as these higher mortgage rates. And the big truth here is mortgage rates coupled with higher taxes and higher insurance have gotten some people in trouble, right? The date the rate, marry the mortgage crowd was, absolutely, a sales pitch and something that should have never been said. And that's why I never said it outside of talking about it in context. But what was promised is all these temporary buy downs and things like that, coupled with maybe a new build that didn't, the lender didn't escrow for the taxes that they knew were going to come, right? They escrowed for the tax number that's on record, that's the raw land. Once that, year hits and they reassess it with the building on it, taxes go through the roof. So their mortgage payment, they're paying $50 a month on taxes. Then all of a sudden there's an improvement on it. And now they're supposed to pay $300 a month in taxes. That's a $250 increase on top of a temporary buy down. Year two, the rate's going to climb 1%. It's another $200, $300, $400, depending on how much your mortgage is. And then the taxes follow suit. Next thing you know, you're paying $1,000 more minimum on your mortgage payment. And that's something that, per month that adds up. So the mortgage rates are certainly there, right? We have sticky inflation. That's interest rates are kind of sticking. I did get a text today that we're at a 3-year low. So if you are interested in buying a house on Thanksgiving, let's get rolling. I know some lenders that are working. I will not be working tomorrow. I'll be spending time with my wonderful family and watching some football. And then, of course, the Ohio State-Michigan game on Saturday, which most of you know is important to me. But so that's that. Buying power has definitely been crushed just because of interest rates, since 21, 22. So when we're getting in bidding wars, they're looking very different. There's not 100,000 over, 50,000 over, even 20,000 over. We may get multiple offers on the perfect turnkey house, but it's very much within reason. And so as we're kind of looking at this and we're divulging into this information, we need to understand temporary rate buy downs are a little scary, especially because your rate's going to go up, your taxes are going to go up, your insurance is going to go up. And those are given. So by the time you're at the end of a 3-2-1 buy down, it could be $1,000 to $1,500 more a month as those kind of add up. So definitely something to talk about. Next, we have, media headlines are adding a ton of confusion. We're talking about high interest rates and how this happen. And we're really focused on the Fed rate all the time because it focuses on the economy. Well, the Fed rate isn't directly correlated to the mortgage rate. And when the Fed rate drops, the mortgage rate usually goes up a little bit because the mortgage rate's tied to the bond market, which is opposite. So those are things that the media has not helped with, and the traveling of information that is added to this. So let's talk about what the saviors are. What can we do to help our affordability problem here in Colorado, in this country, as we go? And I'm going to tell you right now, the first one is control your insurance strategically. There is a deductible buyback program that certain insurances are having. Basically, what's happening is they're moving most of their policies, especially on roofs, to a 1 or 2% deductible. And once you get to a certain point and you have a 2% deductible on $1 million house, that's $20,000. Well, that'll probably pay for most of the roof. Now, $1 million house isn't what it used to be, but you can probably get a roof pretty close to $20,000 on $1 million house here in Colorado. Well, what they're doing is they're having insurance on the deductible. So you can pay $800 or $500 per, whatever it is, per $5,000 of deductible cost, and you're going to pay, $800 to $1,000 a year for that rider. But then when that claim comes in, then that deductible buyback pays that. So it's almost like an Aflac policy for your insurance. There's also other companies that have it as well, that will pay out if you have a claim, or you have a roof, you need a roof, you can make a claim with that rider, and maybe it just pays for the whole roof. Right. And you don't even have to make a claim on your insurance. And so there's certain things that are coming to the market that are, kind of shuffling around affordability for insurance. And I mean, to get a $1,000, $1,500, $2,000 deductible. I don't even know if that's possible here in Colorado on the roofs, depending on what it is. So if you got that, hold on dearly and expect that to change at some point. Pay attention to those declarations when they come out every year on the insurance renewal, because that's where you'll see that deductible increase. But certainly ask about these riders, see how you can mitigate that cost, especially as those deductibles go up 1-2%. And then obviously shopping your insurance. Now, I want to caution you about shopping on insurance. There's some new builders that have insurance companies associated, and they'll give insurance for dirt cheap the first year. Well, if you get dirt cheap insurance that first year, you have a temporary buy down and the taxes aren't, fully caught up, you're going to have a much lower minimum than you're going to have in year 2. So just make sure you're paying attention to that and budget accordingly. Yes, take advantage of the deal while you have it, but understand that that deal might be a sweetheart deal. And, especially with the lenders that are there, make sure that they're going through that, make sure they're doing everything they can to escrow the estimated tax amount versus, what the going tax amount is from the public record. Hopefully they're not doing that, but they are sometimes. So just make sure you're aware of all of those increases. Next, you can control with rate buy down and timing, right? I'm going to tell you right now there's articles all over that say record number of homes are being pulled off the market. Well, we've had higher inventory. So of course, during the holidays, more homes are going to be pulled off the market than in years past. So that's kind of a fear tactic. If you're talking about that at the Thanksgiving table tomorrow, make sure you understand we are, 3, 4, 5 times the amount of inventory we had during the lean months during COVID. And of course, during the holidays, we always see more homes coming off. But if they're saying raw numbers of homes are being pulled off, let's look at percentages. And I would bet it's a very similar number to those. But with that said, if there are houses still on the market, they absolutely have to sell. And that's where you get these rate buy downs and you can control some of these rates. So that mixed with the lowest rate in 3 years, according to my text message from the Ruth team today, is a very good piece of information for people that are looking to get a deal to control these rates. Because if they're lower than they've been, we're going to get that rate down into the 5s, hopefully, depending on the situation. Obviously primary residence, good credit, all of those play a factor. So don't go crazy. But that rate can be bought down with these concessions, with these more, desperate, so to speak, sellers. If they're going on the market during the holidays, they probably have to sell, or it's vacant, or, there's multiple things. But a vacant house isn't making anyone any money. So that could look like a dual mortgage payment or, holding costs at the very least. So what I'm saying is, if you're looking between now and probably the middle or, first couple of weeks of January, that house on the market, you might be able to get a deal, right? Depending on the buyers and how many people listen to this and are like, okay, let's go. So if you're interested in that and finding a deal in the market, definitely DM me, comment, buy a home for the holidays below, and we can certainly talk about that. And then the next thing is taxes, right? It may not make that big of a difference to you. You may get denied, but I would highly suggest putting together a report and really focusing on those tax, contesting your tax assessment amount. Because every year you do that, certainly they could say yes, they could say no, you could have a point, you could not have a point. But if you just let it go little by little, it's going to tick up. And then eventually it is going to be higher. And if you didn't contest it last year and it's just a little bit higher this year, you start to get behind. So not to say contest all taxes all the time, but there's probably data out there to help you contest that assessed value and realize that it's not the market value. And nothing that you do when you're contesting your taxes has anything to do with what we could list your home for or what it would appraise for, because the assessed value and the market value are two very different things. So make sure you're staying on that and go from there. And last thing, my call to action is have a wonderful Thanksgiving. If you have any questions, if these conversations come up at the Thanksgiving table and you're like, what did you say? Come back and watch this. It'll be on my Facebook. It's on my YouTube, Instagram, TikTok. Check it out and you can reference it. But then let me know. Let me know what you guys are talking about, what you're deciding to do. But other than that, have a happy Thanksgiving. Thank you so much for tuning in. Let's keep this going. We're getting through this market all together, And I just want to bring you the utmost value I possibly can. So happy Thanksgiving. We'll see you next week on Mile High Market Mastery Live.